Hey traders, TG Watkins here. It is June 8th when I'm recording this, and yeah, we've got a lot of interesting things to talk about today, so we're going to be diving into that. It does seem like the market is doing better. We're seeing participation broaden out. I'll show you guys what the breadth indicators look like, and yeah, I think things are starting to warm up. You know, one way to look at it and think about it is that we're basically 2 years into this bear market. We are closer to the end of the rate tightening, interest rate hiking than we are at the beginning. Even if they might need to still, do a few things, tinker with it, because right now they said they're going to skip the next, interest rate hike. They didn't say pause, but they said skip, and so we'll have to see what that actually means. We'll just have to see where we are. And, the whole thing about a soft landing has always kind of been a bit of a joke or, butt of the joke. And I don't know, it seems as though there might actually be some validation of that and validity to it, because it seems as though we might be in this little bit of a Goldilocks situation to where we are kind of reaching the end of some of these things, and a lot of things have already gotten repriced, and we're actually starting to see markets wake back up and kind of, come alive again. Now, sure, maybe there's a recession that happens later. Sure, maybe other things happen. Maybe more bad stuff will happen later. But right now, the economy seems to be doing all right, and it has handled all these things that we've thrown at it, and the market has already repriced everything they've been basing for a year or so or more, and we're starting to see things kind of bubbling up, which leads me to, over here, I'm going to be doing a market update this Tuesday, so that would be, what day is that? The 13th, so June 13th, I'll be doing a market update. You guys will be able to see it, and I'll talk about it, and we'll make sure you guys see the link. But also, if you go back and check out my March 1st market update, back here, 2023 market update, simpler trading, just search for this or look at the link. A lot of the things I was talking about back then in March was at the very cutting edge of saying maybe the worst is behind us. So go check that out. Most of everything that I talked about there is actually panning out and coming true. We just kind of had to wait a little bit longer before we could actually see the things come to fruition. But yeah, things are looking better. And so some of the ways that we're seeing this, and I'll tell you, this was very, very concerning to watch. Not necessarily this chart, but I'll show you the next one. But we do continue to see new highs. They are at least sustaining, as opposed to here where new highs were totally demolished, or here where just no new highs. And you could see simultaneously new lows spiking up. Now, new lows were persisting, which was a little concerning, but they weren't getting out of hand. And that was kind of something we were watching. So this is what the SPX looked like, new highs versus new lows. This is the chart that I think is very interesting, because we were looking at the internals and watching that the number of stocks over their 20-day or their 50-day or their 200-day were declining basically mid-April compared to the market going sideways and up. And we're like, wow, what's happening? Breadth is getting more narrow. The market is only going up because of a handful of stocks. This can't be good. And if the rest of the market's not participating, eventually it's going to break and pull it back down. And that's what we're looking at here. And we're thinking, this is really strange. But then all of a sudden, basically Friday of last week, it was Friday exactly, and maybe it was debt ceiling resolution, maybe it was the Fed talking about skipping, maybe it was a whole bunch of different things that can happen. But Friday was the day, and look at the breadth suddenly roar back to life. I mean, you can see how we've had very other similar situations, right? This is what we're looking for. This means more things are participating, and the market's starting to pick up again. So overall, we're starting to see good things. The Nasdaq, you can see we've been generally moving up, kind of moving up, and kind of moving up. So we're seeing some good stuff. And again, kind of more recently, more things, more names are starting to participate. Also, if we look here, new highs versus new lows. Yes, it was definitely concerning back here when we were seeing the new lows kind of continue to say up. They weren't totally demolished. And then new highs were there. They were persisting. They were looking a little bit funky, but look, they are in an increasing fashion. So this is good. We are starting to see participation. I would not be surprised, on top of this, to see some backing and filling. There are a lot of things that have been moving, but let's make sure we don't get too far ahead of ourselves. And if there are dips or pullbacks, it seems that would be reasonable to expect. So don't be surprised if there are some, but it does seem as though we are also in a buy the dip type of rally or mentality and all that kind of stuff. Okay, so then the other thing we can look at, this also goes along with kind of what I was seeing with breadth, is we look at the RSP, and what we can see here is back mid-April. That is when basically the market topped for this rally, and from mid-April we could see that most of the stock market was not participating. This was kind of indicative of the breadth thing that we were seeing. You can see fewer and fewer names were getting over their moving averages, fewer and fewer names were participating. This was the equal weight S&P 500. And then again, all as of Friday, look what happened. We got a big move. I mean, here you go. This was Friday, and then it carried for a few days. So clearly, the rest of the market is now participating. It's not just the 5 or 10 big stocks. We're really actually seeing more names participate. Now, this has been a big move. This is what I was saying. This has been a big move. So I would certainly expect names to pull back and to go sideways to find support, because this has been a big move, big rally. But it sure seems to me at this point, dips are probably going to be viable. If we were to actually look at the SPY, I still do think, it's been holding up pretty nicely. I mean, look, we're right back to where we were. I know quite a few people were looking for the market, the S&P, to dip a little bit further back to 4,200, 420 area. It did not. I'm happy to see that it's holding up very well, but I'm just saying, don't be surprised if we see the market actually dip sometime a little bit later. Now, it could push for a little bit and do it later. For example, like this, you could see here how the price was overbought. It kind of pulled back just a little bit there, and then it ran up again, and then we got that pullback. So this is kind of my whole point. Like, just don't be surprised. The market can be weird, can be crazy. We are expecting a pullback. We just don't know when it's going to happen. It seemed as though it was kind of gearing up to do that pullback basically yesterday and today, but it pulled back yesterday, and now today's up. So, you got to kind of roll with it. But yes, it is getting a little extended, and pullbacks can happen, but they might happen later. And I think this is a fairly good example of that, to where we had a really big move. It did digest it a little bit. It continued to move, and then we got the bigger pullback. So just kind of giving you guys some examples of what to expect. Nasdaq, we actually did see decent. It wasn't, I don't think it was anything major or excessive or whatever, a pullback yesterday, but it was necessary. We could see that we were getting away from the moving averages. We were outside of the 30 TR, same thing here. We were gapping away from the moving averages. And so we got a little bit of a pullback yesterday. And is that all we're going to get? Maybe it is. But overall, everything looking good. Things are moving up. And if we look at the IWM, this is the big deal. And this is where I've made the last couple of videos of saying, hey, guess we got to change our mind. Be willing to change your mind. And this is where I was looking at price running into the daily 50. The Moxie Indicator was very different. And look, if we zoom this out, and this is what I was looking at, and talking about every time. Look at this. We had let's see. Let me push the button. Let me get this back over here. Okay. So what we were noticing is, there's price getting over the 50, getting over the 50, getting over the daily 50, Moxie Indicator looking good, good. And this time was different. Right there, you can see price ran into the underside of the daily 50 right there, continued to go down. The Moxie Indicator was definitely looking different. And I thought, oh boy, maybe the IWM is signaling when things are finally going to catch up to it and actually move down. And, thinking, okay, we're going to start breaking to new lows. And you know what? It just didn't. It basically double bottomed, and then the next thing it did is it got over the daily 50. And the other thing I want to kind of show you guys, let me kind of zoom out on some of these things so we can look at it. There we go, that's about right. Now that we've had a little bit more time, look here, Moxie price trigger, Moxie price trigger, Moxie price trigger. It didn't go down, so it went up. It repaired itself. And if you look right here, this pullback right there, that was a trampoline move on the hourly chart. And a trampoline move is when price is below the 50, but the Moxie Indicator is above zero. It's a bullish situation. You could see it here. That was a trampoline move. So up it went. You can see here, price was below the 50, Moxie Indicator is above zero, trampoline move. And here, right there. And that was a bigger one. So, those setups were there, and they were working out. Now, let me just sidestep for a little bit, speaking of those trampoline moves. And I wanted to show you guys Mara. Now, Mara has been an absolute pain to be trading. I've tried getting into it twice. This looked like that was going to be finally be the time, but then the news about Coinbase and getting sued by the SEC kicked in, and it dropped. So we got out before it up here, so it wasn't big of a loss or anything else like that. But look what happened. That Coinbase news came out, and look, it just absolutely rocketed back up and made new highs for the day or the day later. I mean, talk about a dip getting bought. So I would look at this and say, boy, this seems bullish. You know, it has been going sideways for quite some time, and if it doesn't want to go down, then what might it do? Eventually, I would imagine this is going to go up. And so we're trying to look at this and figure, okay, when's that next time? That being said, this dip, price below the hourly 50, the Moxie indicator above zero, technically, that was a trampoline move. So just wanted to show you guys another one of those trampoline moves that actually worked out for some of these names. Yeah, we're seeing some things. Another thing I want to show you guys is if we come over and let's go look at the higher time frame charts. If we look at the UUP, this is the dollar, and one thing I'm looking at, and it's a little too early to confirm, but I'm looking at this and saying, price is now getting underneath what looks to be a soon-to-be downtrending monthly 10. So you can see here that the monthly 10 is going up, and it looks like it might start going down. And if price gets caught underneath this and starts to go down, well, then that could help also propel the market higher, because a weakening dollar should be good for equities, and that looks fairly interesting. There was a double bottom. You can see right there, that was the double bottom that helped kick price up like that. But this might just be some noise until price actually does start to go down a little bit. So we'll have to keep an eye on that. It's a little too early to confirm anything. The other thing that I'm kind of noticing is that we have price running into the daily 200, just like it ran into the daily 200 here, and I'm kind of thinking, that might actually be resistance again. And if we look at the hourly chart, what do we have? Here's your double top. There's your negative Moxie divergence. And yeah, so this looks like it might be running into resistance and could actually roll over and go down in a very, very similar way to what we saw before. And you can see here's price up, Moxie indicator down, and then here was an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. So I want to keep watching this on the hourly chart and seeing if this actually forms an inverse trampoline move on the hourly chart and does start to head down. If it does, then I have my eyes on precious metals. Have you guys seen what silver was doing today? Pretty nice move, right? And look at this, elf shoe. And we have price down, Moxie indicator up, and then it pulled right back into an uptrending hourly 50 with the Moxie indicator above zero. This looks like this is a bullish setup. This fulfills a bullish Moxie indicator rule setup. And if you look at GDX, we are basically seeing the same thing. You can see here, there's an elf shoe, just like this was an elf shoe. You can see we had double bottom, positive divergence, and basically we could call this an inverse head and shoulders. We could also call this some divergence, and there's price pulling back into an uptrending hourly 50 with the Moxie indicator firing. And so gold, GDX, silver is looking bullish, which means with the dollar also looking like it could top out, it looks to me like those two things could move inversely together. And so I do think that precious metals are looking like a good opportunity in through here. Anyway, hope you guys enjoy that. I look forward to the market update on Tuesday, and we'll see you guys again soon.